Aussie Swiss franc, as all Swiss franc pairs last week, was a monster. We had a huge up moves, about approximately 600 pips upwards. If we see on the indicators, can we expect a end of this upward cycle? No, we don't see any divergence here happening yet. So that could suggest that there is more to come to the upside. Technically, we are reaching the 161.8 level as we speak, but considering we don't have any divergence here to stop it, probably we will see at least the price go to the top of the price channel, price action channel, 1 and 2 3, something like this. If this happens, we will also break the top of the range in which I think we are already inside for 60 days. If that range will be broken to the upside, maybe there is a lot more to go to the upside. Definitely a pair to watch. The Aussie yen, also very interesting. What we can see on this chart is that after we got a special cycle to the downside, we already reached the target of 50% retrace after that, and price went higher. So the question is, what will happen now? What we can also find on this chart is that we could see something happening that looks like an HNS. If it's a valid HNS, we could see price as well go to the 103.12 level. But if that will happen on the short term, that I don't think so. Why not? Because if we go to the lower time frame, we can see that here something is developing like that, looks like bearish divergence. If we go even one time frame lower, we can definitely see that the divergence started here. Price went higher, and we are now in that zone. We had a false break to the upside, we had a false break to the downside. This could be that this whole zone here could be a range. So in order to short, what do we need? We need to go to the 1 hour, and if we would get something like this below last low, 50% retrace, and from this point we could sell. On the longer term, this pair remains, in my opinion, a potential opportunity to get this HNS. But for now, the monthly and the weekly trend remains bearish. As long as that is the case, I would strongly advise to look for maybe around 77, 78 first to be reached. And I have another reason for this, and that is in the weekly. It is in the weekly chart, is it? Yes. We had this Bollinger breakout, Bollinger Band breakout, and this suggests to me that this breakout has a little bit more to the downside to go, which would complete the HNS. And from this level, definitely we will check if there is any buying opportunity. The next interesting pair is the Aussie dollar. On the daily chart, we can see that price has been moving quite smoothly into this price action channel. Price has made new highs, almost touching the, I think, something like 560 days old high that happened here. So we suspect that level to be touched again. If you go to the lower time frames, we can see that we have something now developing as a double wave cycle. Is it going to be a double wave cycle towards the 161.8 level here? I doubt it, because now already we can see that we have some bearish divergence here happening. So it could be possible that this will become special. So what we can do on the shorter time frames, if you are not long, don't try your longs unless you could see from this point a double wave retrace. That would be your entry towards the 0.83 level, from where we will look to short 50% of the last triple cycle. That is also confluent with the control price line of the price action channel. So I think we have a very big probability that we can go short after we reached this level. The CAD yen at this point on the daily chart, we can clearly see that we had also here this special cycle ended. It ended with this divergence over here. After the break of this line, we were looking to buy again. So after the special cycle, we see now something developing as this H and S head and shoulders pattern. If it is a valid head and shoulders pattern, we could easily see price to go around 101, 102 level again. But is that really going to happen? Let's take a look on the smaller time frame and what we can find here. We can see on the 4 hour that we had this last big wave up. This big wave is something also like special cycle, triple cycle happening, but it ended with a divergence, huge divergence actually. From there, price just went to range about in this range. So what we do in this situation, very easy. We had a special cycle ended with divergence, then we are in a range. In that stage, usually we sell the top of the range, which is exactly what I did last week. I sold the top of the range, protecting last high, and we will see if next week we would get something like a bearish convergence, a retrace, and a continuation down, aiming the 50% of this triple cycle, special cycle, which would be around 85, 86 on the CAD yen. The Euro CAD, a very interesting pair. Why it is interesting to me? Because it's a Euro pair and it looks like it is ready to be longed. What I don't want to do at this point in time is to short any Euro pair, because I think the fundamentals overrule the technicals. On the Euro CAD on the daily chart, we can see that we are reaching the technical 100% Fibonacci expansion. At the same time, we can see that we broke out of the price action channel. Price actually created a new high, so this could indicate that we have a trend reversal or a short-term retrace. How do I determine actually if indeed we have a trend reversal? Well, as I use price action channels for this, it is very easy, because they will indicate in this field all information you need to know. What we saw is that we actually got this price channel broken to the upside, creating new highs. Okay, we have bearish divergence over here, so it could still be ranging in the in this range. Because we had a double wave cycle ending with a divergence. Personally, I only want to buy the bottom of this range. I will never try to sell at the top of this range. So there is only two things we can do from here. We wait until we see a new high developing. This new high creates bullish convergence. Then we get a double wave down and we trade the break of this trend line, connecting them together to go long. If, on the other hand, this pair would just ignore everything and go down further, then I would expect this level of 161.8 to be reached around 1.41. The Euro Swiss franc, one of the monsters last week. If we go to the weekly chart, we can still find this special cycle that happened. After a special cycle, we aim to see 50% Fibonacci retrace as our first target. So we want to see on the long-term price to reach 1.3250. What we can do on the lower time frames, well, very simple on this pair. Every double wave cycle is an opportunity to buy. Simple as that. Where will we buy? Where will be our targets? If we do a Fibonacci projection of this first cycle that already happened, we can see that 61.8 is around 1.3250. But before we will get there, maybe we could see something like a triple cycle even developing. Anyway, next level to watch, 1.3250. If we see a double wave cycle to the downside, that still can be our entry, reaching for that target. The Euro Pound, next interesting pair on my list. The Euro Pound, well, when it comes to the euro, at this point I think the fundamentals are overruling the technicals. So the euro is a pair which you should be very careful with. But if we go to the daily chart, we can see clearly that we had something like a special cycle. A special cycle ended at the 161.8 level. Also, it ended with a divergence. So that is why we could assume this upwards trend is over for now. After that, price just kept ranging about. So what we can do in this situation is we try to sell at the top of the range. This is exactly what I did last week already. Price went a little bit more high after that, almost touching my stop loss. I think I will put it a little higher on Monday morning if it's still possible, because still I believe that we have a very good chance that price will at least go back down. If it does so, it means this top trend line is respected. It could mean that we have a new price action channel being created, and as price is in excess level, which means the boundary of the price action channel, I also first take profit one. For me will be the control price level, and maybe even the bottom of the range, and maybe even the 50% of the previous special cycle, from where I will make a new plan to happen and see what we can do with the euro cable. Euro New Zealandian, very interesting in my opinion. Why this is very interesting? Because it is a euro pair which looks ready to long, and this is exactly what I am looking for, because we know that the fundamentals on the euro at this point overrule the technicals. Monday morning we also have euro news. There's a high probability that this news is going to be very good news for the euro. So that brings us to the euro New Zealandian. In the H4 chart shows us that we are moving smoothly within the price action channel, and this is one of my strategies that I use most of the time. I created those channels and I try to buy or sell along the weekly trend, which means that when price is in an excess level, as it is here or it is here, I try to buy the excess levels. Buy the excess levels, and my first take profit is always the control price. Control price is this red line in the middle. This indicates actually my average price of that channel. As long as price stays in this channel, the channel is respected. And I use divergences to find out where to buy at these excesses or where to sell at these excesses. So when it comes to the euro New Zealandian, at this point we can see that price is in excess. The fundamentals on the euro are long, and if we go one more time frame lower, that would bring us to the 1 hour chart, and what we can see there is that this huge, maybe the 4 hour chart is better. Yeah, what we had here is that this huge downwards cycle is stopped by this beautiful divergence. So in this situation I would look for a double wave opportunity, and that opportunity is right here. 1, 2, 3. After the first wave up, still price is moving about in this range for a while. So because we had this 4 hour cycle ending with this divergence, we could say that we want to buy the bottom of this range, which is exactly what I did last week. I tried to protect very closely in the beginning, just a few pips. After that, price went up. Now I am already in profit. So what happens next is the big question. I would like to see this range broken, of course, to the upside. We have this top trend line over here. So what I actually would like to see is if you are not in this pair yet, once we go past these two resistance lines, then we would, I think, shoot up at least towards the control price of the higher time frame on the daily chart. So again, what if you are not in this pair right now, what you want to see is break off this level, retrace, and jump in to try your longs. Euro US dollar weekly chart shows us that for the first time in a really long time, let's calculate how many weeks. That is 100 weeks. 100 weeks ago, price is currently at the same level as it was 100 weeks ago, potentially even breaking this range. This range we have right here. On the daily chart we can see here the top of the range for now is not broken. Monday morning we have to be careful as we have euro news, so it could be that on Monday morning, for the first time in not 50 weeks but 70 weeks or something, that price would try to break out of the range. If that happens, then we are after longs, and longs only on euro, which matches fundamentally perfectly. We can also see that on the bigger time frames, where do we actually want to go with the target? That would be at least, I would say, 50% on the long term. Maybe 38.2, but anyway, this is our target level. If you are not in euro US dollar right now, please stay away completely. I think it would be very unlikely to see a bearish convergence happening, which is the only reason that I would allow to short, is if we would break below this level, go back here, and then we maybe go back inside the range. But in my opinion, that is very unlikely it will happen. More interesting, if we would see something like this, is not even try to short it, but to look from buys after we saw this retrace happening. I think too much positive information is coming from the Eurozone in order to even try your shorts. Fundamentals overrule the technicals. Buys only for me, so better wait until you find the good buy opportunity if you're not in, unless jump in blindly. That's about it on the euro dollar. Very interesting is the pound Aussie. Why that is very interesting? Because on the larger time frames we had something like triple cycle to the downside that ended with a divergence. After that, here we got a higher high indicating reversal of trend, and indeed, if we check the price action channels, price moved smoothly within this price action channel and is now at the bottom border of this channel. On the same time, we can have this lovely divergence happening here. So we have all the reasons to go on the even lower time frame in to check for a buy opportunity. If you go to the 30 minutes chart, we can see that price is now currently moving inside of the range. The 1, 2, 3, 4, something like triple cycle. Maybe it should be double cycle. You can decide yourself. Anyway, it ended also again with a divergence. We are at the bottom of the price action channel. We are at the bottom. We're not at the bottom of the range, but if we would go again to the bottom of the range, that would be for me another buy opportunity. And if we would break the range to the upside, after we would see new highs, retrace and buy. First target is the control price of the higher price action channel, which is actually firstly around 169. Eventually I would aim for the top of the price action channel, 176, and even if we are lucky, we will go to the 38.2 of the big wave down around 1.8280. Very nice opportunity. This is the pound Aussie. Another Swiss franc monster is the pound Swiss franc, which also, like all Swiss franc pairs last week, made some monster moves to the upside. We already had, before that happened, we already had a bullish convergence even happening on the 4-hour chart, which I believe it was here. After that, we want to see double wave cycle. I think I sent even a signal here which failed, because after that price just went back unexpectedly to the bottom of this range. Uh, After that, we got a big rally again. These are what I call very dirty moves. Uh, so what we can do with Great Britain pound Swiss franc at this time, actually the only thing I have to say about this pair is that whatever you have, definitely I am aiming first to the top of this channel to begin with. Maybe we will, like euro, even get out of it, maybe, but for now, as we only had higher highs on the lower time frame, I can only suggest that if you see a double wave to the downside, we have here, you can't say another convergence, but it is proof that we have higher volumes coming in and we have higher price. So that means that the general direction is still up to go. So if you get 2 waves down, 3 waves down on Great Britain pound Swiss franc, that would be a good buy opportunity. The pound yen, a very interesting pair. What we can see happened in the past is that we got something like a special cycle. So again, lots of special cycles happening in the market. We want to aim 50% as our first target after that move. Did it happen? No, it did not happen. So even the weekly trend is bullish on this pair. For now, we remain bearish until we reach the target of the special cycle. After that, we probably will see a continuation to the upside. So 50% is here around 143.30. If we go even to the lower time frames, what can we find here? Again, price created a special cycle. After that special cycle, we want to see the 50 being reached, 50% of the complete special cycle. It did happen, but as this looks to me, as it is just one straight wave, we need to see another wave. We need to see this is actually 1, 2, 3, 4, 5. No, this is 3, but okay. This just looks like a perfect Elliott wave cycle, but the correction afterwards doesn't look like it is happened as over yet. So we still could see here another big leg down, but it could also mean that this was the correction, and from here we will now enter into wave 3 again, which is a long. So it is a double situation. We have 2 scenarios. So how can we choose for either of them? Very simple. As you can see, we have 2 price action channels running now, 2 valid zones here, and inside this square is all information we need to know for what we will do next. This is the answer to the question, what will happen next? Because if we would break this this plane to the upside, we could think that we had a trend change. So now this price action channel has become the main channel, and it broke out of the descending channel. If we would see price heading lower, we could still assume that we will see at least another double bottom before we will get another potential reverse on the pound yen. So keep your eyes on this one for now. Hello traders, my name's Rudy. I would like to go over several nice trading opportunities for the week to come, starting with the Great Britain pound US dollar. As you can see on the weekly, that price did a very nice double wave cycle to the downside. We have something like a bullish divergence. Price looks like it is being rejected at this point, rejected at the 61.8 level. So this could indicate that this is the trend is about to change. If you go to the lower time frames, on the daily channel, we can see that price has been moving very nicely into this price action channel from where it hit the bottom around 61.8, bounced back up, creating higher highs. So this could indicate that we are after a trend change. Look at that beautiful divergences happening here. And I think somewhere here we had a bullish convergence on the daily chart, so a quite powerful signal. If we go a little lower to the lower time frame, we go to the 4 hours, we can see the price has been making this triple cycle, almost completing it. And if it does, again, this 161.8 level is our target. If we get there, price again will do this double wave to the upside. If the triple cycle is finished, after that we will see price go back to the 50% level, which is actually around this control price line in the middle. And after that we can look here if the trend will be changing or if we will get a double bottom. But this is exactly the next point to watch out for. The New Zealandian Canadian daily shows us that after a double wave cycle to the upside, which happened here, 1, 2, we could find not only the divergence from the previous high to the new high, but also we can find an intermediate divergence, would probably indicate that this double wave cycle to the upside has finished. And that was the case because we saw a 600 pip drop after that, and that followed by a second attempt to break the bottom of the channel and a third attempt. Now, all good things happen in 3, but all good things can also not happen in 3. So if it didn't happen the third time that this border was broken, I assume that we have a little bit more to the upside to go on this pair. If you look at it from the price action point of view, price is moving smoothly into the price action channel. And as I explained before, I always try to buy excess versus the control price level. We are now currently in the situation that price is hovering about the control the excess level of this price action channel. We are also at the bottom of this range, which failed 3 times. So that only brings me together with this kind of bullish hidden we have here to think that we could see a triple cycle develop on the New Zealandian and Canadian. Doesn't hurt you to try your longs on this level where we are as we speak, because we can protect this range very tightly. I have 2 buys running here, and what is also interesting is that if we go to the lower time frame, we can find another price action channel, and at this point also we can find price touching the excess from where I would like to trade to here. We are at the bottom also of this channel, and we are at the bottom of the bigger price action channel. So there is 3 times a reason to go for a buy on the New Zealandian Canadian dollar. New Zealand Japanese yen, 2 scenarios on this pair. Why? Because on the monthly chart I would say that after we had this double wave up, to have this double wave down looks like the perfect double. So my monthly trend view is bearish. Also, if we go to the weekly, we can see that after we had clear 5 ways up, now we are in this ABC correction. Only question for me is the ABC correction this over now? So if that is the case, then now we would go into wave number 3, and that suggests that this might be also head and shoulders pattern happening here. So 2 scenarios on this pair. One scenario is that the top of the range is respected. If that is the case, then we would go for a double wave cycle towards 61. If the range gets broken to the upside, then we might as well get this beautiful HNS bringing us back to the previous highs around 95. Let's take a look at oil. Oil did some pretty interesting moves last week, providing us 600 800 pips opportunity. Last week we saw this double cycle unfold towards the technical level of 100%. Could this be it? Maybe it will be, because we have some divergences forming against the longs on this pair. Also on the lower time frames we can see definitely that we can find bearish divergences. So as personally, I only would want to long oil at these levels. It's best, in my opinion, if you're not in and you don't have your profits protected right now on oil, to stay out. But if we would see that on either way this price action channel price would bounce, become in excess, that means outside the border, and jumps back in, from that moment we could consider to maybe even to try to catch oil on the long side. Or if this specific 4-hour price channel will be broken to the upside and we get double wave retrace, resistance becomes support, that would also be an interesting situation to look for a long position. That is, if the divergences tell us so. That's my view on oil. Silver, very interesting last week. Silver on the higher time frames for me remain absolutely, the weekly trend remains bullish. I actually only want to buy the metals unless I see a bearish convergence. I would sell, but for now indeed I am only looking for buys. Last week we saw a bearish double wave cycle, and at 100% Fibonacci expansion around 1536. After that we saw that indeed price jumped out of the price action channel, and this was the confirmation that we are in a reversal, or in at least in a retrace mode. If we examine the technical levels of the last wave up, then we can find here that 161.8 level almost is being reached. Question is, of course, will it stop silver or not? Well, so that leaves us to two scenarios. Scenario one is that it will just cut right through. In that case, we will at least get a double top before we will look for potential sells again. Or if 61.8 will reject the price, then what we are after is that we want to see a convergence happening. In this case, a convergence to me is at least below that level. Retrace, this would be our sell, and afterwards we could look for more buys to come. The US dollar CAD, we are currently in a buy trade for this pair. The reason why we are in a buy trade is because we saw a huge down move on the daily chart. This down move reached the 261.8 level, which is not really a level we trade, but considering that this level is confluent with the higher time frame support level around 1.24, we could expect a bounce to happen here. If we go to the lower time frame, indeed last week we could find on the 1 hour we could find something like a bullish convergence happening, after which normally we want to see a double wave retrace, and then we will enter a buy trade. But we had the news on the CAD last Friday. It was more bullish than we expected, and now we have this kind of double bottom happening here. Nothing lost yet. Monday morning we will see if indeed price can find the upward movement momentum again to first from this point break out of the range, go above control price, and maybe even start trend change what we are expecting. If that will not happen and price will just go lower, then let it go. Next level we probably will see then is the 119 120 level, from where we will make a new